Hey, it's Mac with PriceActionTradingSystem.com, and it is Wednesday. It's April 7th. This will be our chart lesson for the day, and we just got a range day today. Clear and easy to see range day. I started out with this a little bit lower. Early this morning, I had the lows right across here because that's where you had more touches, but it obviously expanded, and you can clearly see that's where you get the most touches and closes now, and that midline fits fairly well in there where most of the middle of this, you can see prices working both sides of that middle line. Not a lot of trades, a lot of green ones in here that you could probably, a couple of them you might argue to go either way, but I marked them green because they're really, I marked them green just because I felt like they were a little bit aggressive. So they still fit our entry rules, and you might could argue for them to be, they could, a couple of them could be real close to being blue or red, but I went ahead and marked them green most likely. We'll talk about those when we get to them. I kind of go over them, but not a lot of trades today. Shouldn't take very long. I should be able to stay back into my 15 to 20 minute window, which is probably easy to do as long as we continue with this kind of normal volatility. I should say. The market does really feel much more normal now. And a lot of people come to me and say, why is everything so slow? But if you've started trading in the last year or so, this thing probably feels like it's just creeping. But honestly, this is a relatively normal ES market. It much easier to wait on and see. Generally, the signal bars are smaller, although they haven't been today. But this has been a range day, and you get a lot of these quick and fast reversals, and that's kind of common on a range day. So not as many small bars today, but still, there's still some trades here, still a chance to make some money. You might have had to sit and be patient, or you might have to take a little bit more aggressive trade than normal. But we'll talk about each of the trades here in just a moment. Clearly, though, a range day, highs, lows, and the midline right through here. The midline is basically where we closed yesterday. This red line is yesterday's close, as you can see right here. And the yellow line is the open for today. So we're still finding resistance right around this 40.74 to 40.78 area, right in here. It has been strong resistance. My guess is we're going to work through here before it's over, but we may have a correction before we do. My target is still 4,100. I don't see any reason to back off of that yet, because really all we've done is find resistance up here. We're not really selling off. We're just finding resistance, and we back off of it a little bit, and then we make another run at it. And each time we make a run at it, prices fail, so it backs up again. So anyway, I'm going to back out here, talk about the trades, and we'll wrap this day up. Again, this won't take long because there's not a lot of trades today. 7 o'clock came right in here in this congestive area, and there's lots of support here. There's a little bit of a downward bias, but it's more sideways stuff. So there's no long or short here, no opportunity really to enter, and it just kind of runs on down and bounces. And of course, you would expect a breakout here to fail, and it does, and it comes back here and gets back into the lows of the range, the lows of the range. It's just basically a higher low. It looks like a reversal pattern, even though it's only a first entry short. But it's a higher low. It's a little higher than I like to see for a true higher low. But it's such a bullish bar, and we just failed out. There's clearly two legs down there, and this could be the center of a pattern, and we may make another leg up, similar to definitely this one, but I was thinking there was a bigger leg, but I guess not. So that would be your measured leg right there. It's rare that you'll go into the previous day looking for our measured leg, but if you use that, you can see we got a perfect measured move. And then I used that leg to try to see if we might get a measured leg here, and we couldn't get outside that. We couldn't get back above that resistance area. So anyway, we got a perfect measured move back up here based on this move over here. So I like that entry. There's a higher low, or there's a first break of this little short-term channel, but it's just a first entry. It is a failed second entry short, but I think it's a little far away from the EMA. It's one that it's back in the middle, kind of the range. There's still plenty of room. It's one of these you might argue for. I didn't even mark it green. I think it's a little aggressive, especially since it's an inside bar, but it does have a matching lows, which says, hey, we can take it if we really want. There's another higher low right here, but just a very neutral bar, too much stem. And then notice what happens here. We've got the break of this. We test this resistance. We actually make a new high for this channel. So we pretty much, then we make a second leg up. So we pretty much met our criteria for this trend up to be over, and we're still finding resistance here. So when we come back and test that the third time, which gives you a double test, and you get that nice bearish bar, it's a little bit congestive looking, but there's still plenty of room back to the EMA. I like taking this trade just because of the triple test and the highs of the range. You should be able to get a scalp out of that at a minimum. And it takes it a minute, but you would have got your scalp and you would have got a little more. We actually get a little failed break below this double bottom here and a nice little small bullish bar. It's very low risk, 4 ticks. I marked it green because generally you'd want to wait on a higher low if you get a breakout, just to make sure the breakout's ending, because you could get a little break higher and keep going down and before you reverse. So that's the problem. If this was flat, if we bounced right inside that same place we've bounced here 2 more times, I'd say take that. I'd make that blue. But because we made a new low, this is where people get confused. When you make a new low like that, there's no proof that we're through to the downside yet. If it bounces right there where it bounced before, you got previous proof that, hey, this is strong support, but it went right through this time. And it could continue to work a little bit lower and may trap you. So be careful going long there. That's why that's green. So if you want to be a little aggressive, take it. But when it fails, you'll know why, because there was not enough proof yet to say, hey, this little move down is over. We could have just kept going lower. Even though you got a nice little bullish bar, it could have broke higher by a tick, tested the support area, and it acted as resistance, and prices kept going lower. But when you wait for a higher low, you get more proof that, hey, we're going higher. And we don't get a higher low here. We do, but it's way up here at the resistance again, and you can't enter right there. So it's a little risky. But notice what happens. You actually get a second entry long right here, and you get a technically it's not a fail. I was thinking this was a failed second entry, but it's not. We actually broke lower there and there. So that's the third break lower. So it does act as a little trap because you've had some support there and you went down, and you can see they beat it back up real quickly. You might take this trade just because there was a nice move and then there's a little two-legged correction in there, which is generally the center of the pattern. What I would try to do if I was trading this, I'd let it break higher and I'd drop a limit order back enough to where I make sure I can get out. I don't know if you really could even get in it with that. If that still gives you enough room, it's going to be real close. But it was pretty obvious we were probably going to break out of here, but you don't know that it'll do it on this move. It could have come back down and failed out again. But generally, once you fail out and you get a move like that, you're probably going to get another leg, especially when it's staying in the upper half and not coming back down to the lows. So you may take that trade. It's aggressive, but if you wanted to take it, if you took that trade and you said, hey, I took it, but I know it's aggressive, and I wanted to take it anyway because I felt pretty confident we were going to go higher there, I probably wouldn't argue with you because I felt the same way about it. I think I even talked about it in the mid-morning chart. I'm not sure, but I think I talked about I felt pretty confident we'd probably go test the resistance from yesterday at some point because we weren't, even though we were finding resistance here, we weren't really selling off. And this probably just trapped people. So in addition to doing your measured leg here, make sure you do this one as well. And you can see we got a little bit more than that on that one. So that would have given you a good target when we broke out. We run up here and we find resistance, and the trend is still up. And at this point, you're still thinking, hey, we could make this measured leg. We may go sideways and take a minute to push higher. So you got to be careful going short here. And you need a really good setup to go long. But notice we got a spike in channel here that we had working up, and that's the first close. There's a little two-legged correction there. So that's a second entry long, a nice bullish bar. It's close to the resistance though, but there is still plenty of room to scalp out. So you may take that second entry long right there. There's no reason that says you can't. It's just a little bit aggressive into that resistance when we're really struggling to go higher. Then you get you made a new low there, so you get a first entry, and then it finds resistance there again. Then it makes a lower high, and that is a second entry short. I'm not sure which way this thing broke first. I can't remember. I think it broke lower and turned up and then came back down. So you really wouldn't want to take that trade on a inside bar like that. But once this bar closed, you could go short right there, one tick below it still. Your second entry technically triggered here, but you could use this bar because it's only because it's an engulfing bar, and it makes a higher high than this one. So this is technically the signal bar on this trade. So I hope that's clear. You couldn't really enter on this bar. It doesn't really matter which way it broke first because you couldn't enter on this bar, but I just wanted to point this out and explain this because it's a more complicated second entry. But you could still enter one tick below that bar because it's truly the signal bar because it makes the highest point in the swing. The signal bar will always be the highest point in a swing correction, which that's what that is, or the lowest point, like right here, in the swing correction. So that's your signal bar on that one. So I hope that's clear. So when it broke lower there, I like going. The only reason I made this one green was because if it would have went ahead and broke below that bar, I probably would make this red, but it didn't. It formed another bar, and that's clearly congestive all inside this bar. And so that makes it a little more risky going short there. So I made this one green. It's still a second entry short. It's still prices having turned down here. Now we're below the EMA. There's a very strong chance you're at least going to get a leg like that right there. And if it's going to be a range day, we're probably going all the way back to the other side of the range. So that's kind of how I saw that. I still made it green though. And you just don't get another chance here where we get too far away from the EMA. There's no real short. I mean, even if you want to go short here off the key entry point, the bar doesn't qualify, your signal bar. And then next thing you know, you finally get a second entry short here. Again, I made this one green, but it's real close. You could, if you took this one and said I liked it, I wouldn't have a problem. It's not a perfect signal bar, although it probably is close enough to qualify as negative or bearish. It is a first entry, second entry. It just looks like one leg up though. And that's why I don't like it for a second entry really, because it just looks like one leg up. And that's why I made it green mostly. I mean, you could argue there's a close outside, but that's so close that's not convincing. They'll probably try to test the lows again, which they did. They tried it once, twice, and then after a double test, they couldn't get lower, they went higher. We made the next leg up. So it was obviously one leg up, and then you get your next leg up. And I like going long here because of the triple test. I don't have my support line there, but there's clearly support across there. And you made the low, you test it once, you test it twice. It's a nice bullish bar. It's not perfect, but it's definitely bullish, and you got room back to the EMA. Just try to make sure you got room to get out there. And we had this conversation in the forum yesterday. There's no rule that says you have to have room back to the EMA. And on range days, if you followed that rule, you'd probably never get an entry because you're going to have to enter into the EMA a lot to trade range rules. So there's no real rule that says you can't enter into the EMA, but always be wary of it. Question it, because this has been a downtrend and we haven't closed above it yet. So if you don't, if you're having to go long right into it in this situation, I'd probably say skip that trade. But if you got a little room here or plenty of room, then I like that trade. So, and this one's real close. So uh, just make sure you get a good enough entry that you can get out. You'll probably get out of this regardless because we're probably going with that triple test. So just something to think about. And of course, now you got a break of this channel, move to a new high, and then you get that last little push, and that's a second entry short because this is a double bottom. So first entry, second entry, and that's a big bearish bar. So I like going short there. The only reason I made this one green was because of this inside bar. If this would have just broke lower, I had my, you put your sell stop right there, and it should have gone on down. But when it didn't and kind of went sideways there, makes you kind of ponder, could this be a trap? So unless I like this one less because of that inside bar, but you could still take it. It's a little aggressive. But finally, you get a new low, first entry, second entry. It's right off the EMA. You get a nice bearish bar that closes almost on its low. And you could even call this a first entry, and then it goes down, then a second entry. So you could look at that as a failed second entry long, a second entry short, a bearish signal bar at the EMA. You're looking for a new low anyway. A lot of reasons to like that short, so I like that one. Quick, easy move on that one pretty much. And then we bounce again. And when they couldn't take it any lower than that after all of that, and notice on this one, you still got your break with two legs and then two legs down to a new low and it reversed. So still perfect price action. That's the thing. It's much easier sometimes to see the price action after the fact because you may not see it exactly in real time. You don't really know that, hey, this is going to be a two-legged correction and you still get your two legs back down when you see this forming. So sometimes it's hard to know when the downtrend is going to start back and when it's over. And so sometimes you just have to kind of let those transition areas play out and you don't take any trades. And that's the difference between experienced traders and inexperienced traders is inexperienced traders are looking for an entry on every single printed bar in every swing. And then they wonder why so many of them fail. You wait for prices to get back to the key entry points and then wait for them to give you a good setup. And if you don't get both of those items together, just wait. But anyway, second entry short, quick, easy move down. Now we bounced. There's a failed second entry short here. But again, it's an inside bar before it triggered. It doesn't really matter about your signal bar on a failure, but that just looks so congestive, and you see it was. And so you still might have got out of that trade, but I don't recommend that trade. You won't see a reversal in a range, usually in the middle of the range. You usually see a trap there, and that's right dab in the middle of the range, and that's what you get as a trap. It might have worked, but it still looks like a trap. And you can tell we're just in a range, and you don't really get an entry there. But notice what happens. It finally breaks lower, comes up, makes a first entry, pushes outside, comes back, makes a second entry short that fails, and you can see the resistance right here turn into support with a bullish bar. I like that long because now we're probably headed up. You're probably going to at least get a measured leg like that right there. And you might even measure it, oops, like that. And that you can see that's almost exactly what we got. We actually went a little further and tested the highs again, and then it rolls over. But that was a nice setup right there. I like that setup. But you move on up. There's no more entries in here. You test the highs again. You make a lower high. There's actually a failed second entry long here, but you got to go short right into the EMA, and this should set up on the opposite side. Plus, you don't have a break of this channel yet, so not a good place to go short yet. In fact, we could keep going higher, so just kind of wait, but you can see we end up breaking. And I like this long. I marked it green because it's after 2 o'clock, but it's just like right there. I mean, this bar, you can see it. This was just right at 201 or something. And You got your low, you test it once, you test it twice, it's a bullish bars. Clear support there, you got a chance to go long to ride it back up. So if you took that trade, I wouldn't be afraid to take that right at the 2 o'clock hour. Now once you get on over in here 5 or 10 minutes into it, I wouldn't take any more. But nothing wrong with taking that trade. It was a quick, easy scalp. And that's what I saw. So we did it, and it still took 20 minutes. But there was a little bit of explaining to do today there. So again, not a lot of there's a lot of trades, but just a lot of green ones today. And again, a lot of these, some of these, not a lot, but some of these green ones are close. If you'd have taken them and you understood what was going on, I wouldn't argue with you for taking them. So, but just to kind of keep everybody on the same page and to be able to talk about them and explain to you why I thought they were green. I thought it was, if I think that's best to mark them green, I'm going to mark them green. And you won't have to agree with that. So, and there might be some I'll mark blue or red that you don't quite see the way I saw it. And so you might argue that, hey, that's a little aggressive. And that's okay too, because my skill set is different than your skill set. And so we won't always agree on every trade, because I get a lot of questions. People will come in and say, what about this trade? You didn't talk about it, or you made this one blue. And I, the other day, one just like it, you marked it differently. Well, the context could have been different the other day. And just understand, we're not pattern traders. We don't take these trades because they're second entries or failures or failed second entry shorts or failed second entry longs or bounces. We take them because of the context. The pattern, the only reason we use the patterns is to set up the trade's timing and entry point and just confirm that we're reading it right. That's really all the patterns are there for. If you just trade patterns, you'll never be successful long term. Now, if you trade second entries with the trend, you'll probably do fairly well, but you'll get a bunch of days where you don't have a trend like today, and second entries will eat you up and you'll give it all back. So if you can't read this chart and you don't understand what's going on and you try to trade patterns, you're not going to have a lot of success. You've got to learn to understand the context. What are prices doing? Where are they trying to go? And how are they trying to get there? Now, sometimes how they're getting there is the harder part. It's pretty easy to know that we're going to go from this low to this high, back to the lows, back to the highs, and back to the lows again. That part's not so difficult, but it's knowing when it's headed this way again and how it's going to get there, and when it's headed back up here again and how it's going to get there. But it's all in here, and if you learn to see it, you'll get better at it, and you'll improve your skill set of reading this chart. It speaks the language, just like if I was to write this out in writing, if you can't read English, it would look like gibberish. And if you can't read chart language, price action, then this chart looks like gibberish. It's no different. So you got to get fluid in what this chart is telling you, and you'll never be 100%. It's always going to be like you're a second non-native language to you, that sometimes you don't understand a few of the words. You still understand enough that you can figure it out, but you don't understand 100% of the words, and occasionally you will make a mistake. Even if you're a really good chart reader, sometimes the words are a little minced and you're trying to decipher them and you'll get them wrong. I do that. It happens to me. It happens to anybody. Even the most professional traders occasionally will get it wrong because it's not clear language that is 100% readable. So I hope that makes sense. Maybe that clarifies or simplifies it for some people. I'd like to use analogies when I'm teaching this stuff, because it does help a lot of people to get a better idea of what I'm trying to say. So anyway, we're moving on towards 25 minutes. I'm going to wrap this up. We'll be back again to do it tomorrow and wrap up our week. Today's Wednesday, so believe it or not, another week will be over after tomorrow. But I'll see you tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.